Hi, welcome to the Market Alert for Thursday, March the 18th, 2021. So the markets are relieved by Fed's dovish message, but for how long? This might change if we get a run of strong data in the coming weeks as the US economy reopens and fiscal stimulus hits. Good news is bad news from here. Well, it's interesting to see that, they're happy to go negative on rates. Which is going to be an interesting one. And stocks explode higher after Powell will give SLR update in coming days. He avoided this. The summary liquid, I don't know, something to do with bank liquidity. One by one, as it says here, all the unknowns are being eliminated, which is also interesting as well. Or I'd actually said ignored as opposed to eliminated. But this is there's an update coming in a few days about this one, so we'll just have to wait and see if he does. Powell pumps Bitcoin bonds and big tech, crashes dollar because there's no sign of interest rates moving higher, even though the 10-year yield continues to move to the upside. You have meddled with the primal forces of nature, Mr. Powell. Well, they've been doing this since 2008 and March in particular of 2009 when they started QE1. FOMC packed a huge surprise. Fed now comfortable with slightly negative rates, which I've just mentioned. This implies the Fed is very comfortable with 0% and maybe even negative rates. Of course they are. There's nothing they can do in order to move rates to the upside, and they know this. So in order to keep the illusion alive, they're going to do what they've done for the last 13 years, and that's continue to move rates to the downside. It's not uncommon. The Eurozone has negative rates already. And speaking of rates, yesterday there was a sharp move up in the 10-year yield, which is why I think the market was surprised that Powell didn't do anything about the yield control curve. And you can see here yesterday morning the market just making its way all the way up. It did drop sharply at one point when Powell was speaking, but has since started to move back to the upside. And this is where it comes back to wherever that first one was, but for how long? And I think this is the key with the yield here. If this gets up to 1.75, which JP Morgan said was a dangerous level, 2% for me, then we've got a serious problem. We'll see what they will do then, but interesting to say the least. So let's see what news we got today. I think the criminal's out today. Yes, she is. She's going to be speaking at 8 a.m. just as the DAX opens this morning, so be aware of that. And then we've got Bank of England policy and also monetary policy summary. Official bank rate, that's not going to alter until the US do. Asset purchase facility, and then at 12:30 p.m. Philly Fed. So no news for the afternoon session of the DAX. Meanwhile, implied volatility has not been updated for some unknown reason, so I can't bring you this morning. There's nothing on this. I will drop them a note and see what's going on, but it would have dropped given the move to the upside yesterday. That's all I can tell you. So I wonder if they're going to stop updating this, which will be a real shame if they do. It's not unusual, those sort of things do happen. Meanwhile, in the Dow, you can see yesterday moving back up, taking out the recent high, which we see here on Tuesday, straight through this and then up on the overnight as well. And this is how it looked when Powell spoke, sent the market up 150 points in 5 minutes. The market retraced 62% of this down to the 20-bar moving average and then continued to move higher and has done overnight. And it's the same picture in the DAX as well. Look at the 5-minute chart here. You can see when Powell spoke, he didn't get the same 150 point, of course, but he still got the same up back to the 20-bar, and then it's just made its way back to create a new all-time high, which we've got here. And this is important to take note of as well, because the market's going to have to get through this in order to move back to the upside. So let's have a look at where this is in the 2-minute chart overnight, so we can see that it's here. So I'm going to mark this up so I've got some indication of where this morning, if prices do move to the upside, I can see exactly where that overnight high was made, because in the daily chart you can see we've got the market moving higher with a bit of weakness at the moment. Price is coming off the high, so we can have a look at this and see where prices react if they get to this level. But overnight prices initially moving to the upside there. We can see this up to the 14,700, not 700, I was looking at the R1 there, 14,750 level, and then failing, but hugging the 200 MA at the moment, a bit like a magnet, and yesterday's high as well, which you can see, and we know this from the repetition of patterns, that the previous day's high is very important not to break. If you can get off this, we can go to the overnight high, and then we can work our way through this. It's very positive at the moment for the markets. It's vertical, I will grant you that, but the market is still managing to make new highs. And when you look at the Dow in particular in the daily chart, it is just vertical there. And we know how this ends. It always ends badly with the market correcting this. And when you look at the weekly charts and the monthly charts, we know how it ends. It always corrects at some point, but we just don't know when. And without having the implied volatility, it's a bit difficult at the moment to say when that could be. It'd be interesting to see, once we get the volatility back on stream, how it's going to look, certainly from the chart, as we get down to levels that, down to that 10% area. If possible, that would be fantastic. But like I say, I will chase that up. Okay, yesterday is again a whistle-stop tour, really, because the market didn't do anything. It was waiting for Powell. So I'm just going to run through this, except to highlight something very important here. Yesterday, when the market opened, prices were at the DP. They were above the 200 MA, and they opened above this level, which allowed the market to move higher. Now, keep this in mind for the afternoon session as well. So again, I'm highlighting some important points here. We had some selling coming into the market. This didn't last long, as prices stayed above the 5-bar moving average, continuing to close above with increased volume. And then prices showed some potential weakness there. My ETX went off at this point, as did a few others that I noticed yesterday. So that's why this is the drop off in volume. Otherwise, it would have been the same sort of volume there. And then there's a bit of a shakeout. But like I say, I'm going to fast forward through this because the market just became incredibly quiet, waiting for Powell, waiting for what he was going to say about rates and the SLR, which he didn't speak about. And then in the afternoon, as the market opened again, we're at a BRN, we're closing above the 200 MA, above the DP level. So it was a case of let's just move prices to the upside for a while, as the Dow did this, whether somebody had leaked something that Powell was going to say. But eventually the market just traded sideways. I was having a look at keeping an eye on the yield. We went up to 167 yesterday as well. You say a big move prior to Powell speaking as well. So prices just got stuck in a sideways move there, and we had the crude oil inventories. These came out at 230, and you can see there that we had less surplus by 400,000 barrels. The market was expecting 2.8 surplus. We got 2.4 million barrels, that is, by the way. But the market just sideways, and then coming back to the 200 MA, waiting for Powell at 6 p.m. So there we go, an interesting day, and now we'll see what the market's reaction is going to be following Powell's statement, and when the futures market opens at 7 a.m. it will be interesting to see. But like I say, I've marked up the high from the overnight just in case the market has a run up to this level. It's also got to stay above this high, and if we just compress the chart for a second, you can see we've got the DP a long way is yesterday's low. So the DP on the downside would be the main support area should prices move lower initially. Okay, that will do it for this one. If there is anything else to report, I will let you know. But as ever, thanks for watching. See you in the next one.